frivolous items, you are not really investing. You should be investing in infrastructure for the next generation. You should be investing in power. You should be investing in agri.
Yeah, now we know that the federal government has come out, and the finance minister, the coordinating minister for the economy, Dr. Ngozi Okonjo-Iweala, has talked about President Goodluck Jonathan's economic reform agenda, and of course these are the key items in that reform agenda: power, infrastructure. But although these are long-term projects. So in the meantime, would you say that investors right now are just satisfied, because it's just it's been said now, we haven't exactly seen implementation? Yes, but are investors willing to bet their money on the fact or the probability that, okay, hopefully, between now and the next 4 years, or for the duration of the Jonathan administration, that these policies will actually be implemented and we would see visible growth and development? Yeah.
The investors who place their bet, provided they can see the actions being taken. The first thing that they would like to see is the power reforms. That is ongoing, and I think the bid processes are on. The bidders have submitted bids. The investors are watching. A lot of them are foreign investors. Nigeria must not fail. That project must not fail. It must not be derailed. If that is derailed, investors will just pull out, because that is the only thing that people can use to pin the Jonathan government. Is his own reform agenda on the power sector. That is the only one that one can say is now live, and foreign investors are watching. With the contract zone roadshows in Asia, in Europe, in America. So people are watching this and they don't want to see it go on. So the government should focus on that, and the other things like agri, infrastructure that the government is talking about, we should walk the talk. Okay.
Now, going forward, now looking at the report, I was talking with Rashad earlier on from JP Morgan, saying that Nigeria's economy actually has the potential to overtake South Africa. We know South Africa right now is currently the biggest economy on the continent. Do you see if these policies can be sustained, if we don't have policy somersaults, from being changed from one government? Because we know the President Goodluck Jonathan has just this term left. We have another government coming in, and hopefully, if we can see some stability in policies and sustainability, over term, do you see us achieving these projections? All these analyst forecasts will do this, will achieve this, by this and then, yeah.
Yeah, to be frank with you, I think that forecast is quite very apt. I see us even meeting it ahead of time.
This will mean that we had at some point solved our power issue and embarked on some, infrastructure projects that are actually working.
If those conditions are met, if the Jonathan administration sustains its promise to the electorate, which is doing now, up to the end of his tenure, that reform will have been taken to some level of irreversibility, right? The power sector will have gone into the hand of the private sector, and that would have meant that a lot of foreign investments are coming into the power sector, right? Nigeria needs over $100 billion. Right, and this would have to come from foreign investors. So that comes in, the power sector grows, the whole economy grows. You can be sure that with a population of 167 million people, hardworking Nigerians, going into agriculture, going into other sectors of the economy, we are sure to overtake South Africa, even ahead of the Morgan Stanley's prediction. Okay, now according to the Nigerian, the Bureau of National Statistics, we had a GDP growth in the third quarter of this year of around 7.7%. So would we be looking at a higher GDP growth, something compared to what China? And China has a phenomenal GDP growth, although it's coming down a bit, but they still hover around about 9%. Would we be looking at such figures from Nigeria? Yeah, you see, the figure of 7%, I still, I come from a school that I really like to say things. I have a feel of it. I don't think that figure is right. That's my own personal opinion, because when you walk on the street, you don't see the growth. But the Chinese economy, everybody can see the impact. People, they are exporting. Be that as it may, I see the trend for the Nigerian GDP growth to be upward swinging. But I can say whether it's 7.4 or 2.3 because I can't see it on the street. Okay. What I can see on the street is not as high as that. Okay, so now let's go back to Europe. All that's happening in Europe now, because I know many economies are trying to build firewalls around themselves. Are we, in terms of exposure, is it going to, at the end of the day, more beneficial for us, or should we take certain steps that would, also build a firewall around us too? You can't be a country in isolation. Right, normally you shouldn't build a firewall to yourself. What you should do is to realize that you are a country and you are competing with other countries.
Okay.
So whenever there's an opportunity, you can see the way the Chinese are doing. My colleague that was earlier on, Rashad, mentioned something about the Greece having a plan B. You didn't ask him what that plan B is, but I mean, everybody is looking around China, right? So every country must look at opportunities, and you must act as a company to take opportunities.
Okay.
So Nigeria should not build a wall around itself. It should look at the opportunities. What are the opportunities for it within Africa, across the globe?
Okay.
And we should tap into those opportunities.
Okay, thank you so much. I'm afraid we have to leave it there. Thank you so much for your contribution. Pleasure having you here. Ayoleke Adu is the chairman of ACM Gold, the Forex and Commodities Brokerage House. And we've been talking about, of course, the happenings at the global markets, particularly on the Eurozone debt crisis and how that would impact Nigeria negatively or positively. But he says that Nigeria should take advantage of the opportunities that may present themselves from all of this that's happening, especially in Europe, the way China is doing. We'll take another quick break now. We'll be back with the final leg of the program. Please join us again. Welcome back to Business Morning. Of course, investors, we've had a raft of economic data out this week. And today, the European Central Bank will face its own rates decision. Earlier in the week, we had the Reserve Bank of Australia also meeting that's its Monetary Policy Committee, and they decided to slash rates from 4.75% to 4.5%, of course, citing uncertainties in the global economic growth and, of course, the volatility at the financial markets. Now, let's look at our economic calendar for today. Of course, we have the ECB rates decision. Now, rates have been left at 1.50% in the last couple of months, and analysts have forecasted that members of the committee would decide once again to leave rates unchanged at 1.50%. We also have the Australia retail sales inflation, ex-inflation data for the third quarter of this year. Previously, it went up about 0.3%, but analysts are forecasting retail sales to climb 0.6% for the third quarter of this year. We also have the China non-manufacturing data, that's the Producers Managers Index for the month of October. Previous reading came in at an impressive 59.3. However, there are no forecasts for what manufacturing data would be for the month of October. We also have the UK manufacturing or UK purchasing managers index from Europe. We had a previous reading of 52.9, and analysts are forecasting a lower figure for this time at 52. Now remember that a reading above 50 signifies expansion, and any reading before or below 50 indicates a contraction. So that's still a positive there for the UK economy. Also, we have the US factory orders for the month of September. Previously, factory orders dropped 0.2%, and analysts are forecasting a further drop, this time lower though, at 0.1%. Of course, the market is still expecting a raft of data for the remaining part of the week. We have just one more trading day. And of course, the key data for tomorrow will be the U.S. non-farm payrolls data. And analysts will be coming out with all kinds of forecasts for that data. And of course, that is key for the market because it will indicate just how much the U.S. economy is growing. Now, of course, Custom Street is still getting some more earnings. We had so many out yesterday. We'll just take a couple now, or just about one or two. We had Mobile out yesterday. Its third quarter earnings for this year, according to the company, gross turnover came in at 44.9 billion naira. That's a 0.7% drop in revenues for Mobile Oil. Profit before tax came in higher, though, marginally, up 0.2% at 4.4 billion naira, while its net profit also came in higher at 1.4%. Just about a few minutes to the hour of 11. Remember also that today the G20 summit commences. It's a two-day meeting. The 20 most industrialized nations will gather to talk about the global economic growth. And of course, top on the agenda today will be the Eurozone debt crisis, and Greece will be right in the middle of it all. Remember also that a few days ago, about 2 days ago rather, Greece decided to put the bailout package to a referendum. According to the Greek Prime Minister, he wants to get the blessings or the opinion of the Greek people. But many analysts argue that the Greek people, especially the unions, have been against this package in the last couple of months because it came with a condition of very, very harsh austerity measures. But this referendum will not take place until the 4th or 5th of December this year. And the Greece membership is being threatened right now because, according to the French President, Mr. Nicolas Sarkozy, and the German Chancellor, Ms. Angela Merkel, Greece will be asked whether or not it wants to stay in the Eurozone. And like my guest said earlier on, it seems like Greece may have a plan B up its sleeve. But whether or not they have a plan B, of course, we'll be tracking that for you to see just the outcome of what that meeting will be today. Of course, the global markets are still trading. Europe is just about 3 or 4 hours into today's session. Numbers are still looking mixed right now as investors wait on the sidelines. Nail biting, waiting for the outcome of the G20 summit. It will end tomorrow, and of course a decision will be taken